Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 29th of April 2024. Gold remains in a strong bullish trend, as you can see on this weekly time frame. Though last week prices fell after it had reached extremely overbought levels. In addition, we had the 161.8% extension level of the last downswing that took place from August 2020 to September 2022 low. Here, profit taking was an additional factor weighing on gold prices. But as you can see by the higher highs and higher lows, and not to mention these moving averages and whatnot, the trend is clearly bullish and dip buyers remain in full control. Let's zoom into the daily chart, and you can see that the RSI is no longer at extremely overbought levels of above 70. It has eased back, as you can see, because of the consolidation we've seen in the underlying price of gold. This is bullish price action because now the RSI is no longer at extremely overbought levels, and instead it's above the 50 level, which is kind of the sweet spot, so to speak. Additionally, gold is finding good support at around this 21-day exponential moving average, which is an objective indicator of the short-term trend. So what do we want to see next? Well, from a bullish point of view, I think we would want to see a move above 2360, which is a short-term resistance level, and it's where the resistance trend of this continuation pattern comes into play. A potential move above 2360 could pave the way for 2400, and thereafter we have the all-time record high at 2431. That's not to say that gold will necessarily stop there, but that's going to be the next upside objective in the event of a bullish breakout. Now, from a bearish point of view, for as long as gold remains above the 21-day exponential moving average, that should keep the bears largely at bay. However, a daily close below the 21-day exponential could pave the way for a run to below short-term support at 2300. And the next downside target in that case will be much lower, maybe at 2222. Which is corresponding with the high from March, 21st of March, and then below that we have 2195. So there are lots of support levels on the way down that could potentially lead to another bounce, but we'll cross that bridge if and when we get there. For now, it's all about what happens in this consolidation pattern, and the longer it remains inside this consolidation pattern, I think the more likely we'll see a bullish breakout than a bearish breakdown. Now, silver is still looking quite strong, despite the fact that it has eased off its highs somewhat noticeably, but the breakout continues to hold for now above the $26 level. This is the monthly chart. So we had a lengthy consolidation period of around 3.5 years. And the fact that it has only now broken above the resistance trend of this triangle pattern to the upside on this monthly time frame, this is very significant, suggesting that silver could potentially catch up with gold in the weeks and months ahead, and potentially head above 30, which is this high here, and possibly even make its way towards its old record high that was hit in 2011 at just under $50. So obviously that's a long way away from here, but the main concern now is, can this breakout hold? So for as long as it remains above the $26 level on this monthly time frame, I think the path of least resistance would be to the upside. Ideally, I wouldn't want it to pull back deeper than it has, and hold around current levels before it's staging a breakout, because the deeper it pulls back, the stronger the bear's control is going to get. So ideally, from a bullish point of view, you don't want to see a deep pullback. Now, like gold, on the daily chart, you can see silver is also testing the 21-day exponential moving average, which is an indicator of the short-term trend. And very similar to gold, it too remains inside a continuation pattern. In this case, we have a bull flag, or a potential bull flag. And, we could see prices go up and down in this channel for a few days, but essentially the path of least resistance will remain to the upside for as long as we don't create a lower low. Support is provided right now at around $27. As you can see by the wicks of these candles, silver has held above this level for a few days now and above the 21-day exponential. So what we want to see from a bullish point of view is continued consolidation in this channel, ideally holding above the 21-day exponential moving average, and then a potential breakout to the upside. If and when that breakout does happen, then that could pave the way for a possible move initially above the recent highs of 29.80, and then thereafter we have the $30 psychologically important level, and slightly above that we have the February 2021 high at 30.08. So those are the key levels that will come into focus should we see a break above the trend of this bull flag. I'm sure you've already seen what's happened overnight in the dollar yen, with rates breaking above 160 before dropping 500 pips from there to or more than 500 pips to 155 to below 155 before bouncing back. So it's been a very volatile session, and I know you can't see this on the daily time frame, but if you zoom into an hourly chart, you'll see all the price action. Essentially though, the trend is still bullish, and despite the suspected intervention from the Japanese finance ministry, well, nothing else would cause such a big move with it. So it's got to be intervention from them in the FX space. So the dollar yen is going to remain quite volatile. Watch out for further intervention. But we now know where the line in the sand is for the Japanese authorities. It's at 160. Previously, people were thinking it's at 155 or thereabouts. But we have seen a big reaction off of this 160 level. So moving forward, if we see a recovery throughout the session, do watch out for further intervention at around those levels. But if you zoom into the hourly time frame, you can see that there will be interim levels of support and resistance to keep an eye on. In fact, you know, and this was a 15 minute before, but I've got the hourly chart. Let me just go back to 15 minutes to show you something very interesting. On Friday, you may recall that the dollar yen dropped really aggressively at around 8 o'clock London time, and that looked like was the initial intervention from the Japanese authorities, although there wasn't any confirmation of that. And then we saw a further spike lower later in the day. That also took place at around that 156.82 level, the high from earlier in the session, before rates broke higher. Overnight, though, this is what happened. Rates bounced back from that 155 level on a couple of occasions before consolidating. So right now we are at 156.82 again, which is the high that was hit in early European session before that big drop happened. So that's going to be a pivotal level, I think, right? So there's no surprises, therefore, to see rates coming off a little bit from its early highs. So keep a close eye on this level, because we could see renewed selling pressure come in at around that area. Now we have more earnings coming up this week, including from the likes of Apple, which is obviously a big technology stock, which puts the Nasdaq 100 into a sharp focus. The Nasdaq rallied last week, making back some of a big chunk of the losses that it had suffered in the previous week. Interestingly, the Nasdaq found support right from the high of December at 16,970, which was resistance in the past, turned into support, leading to a bounce. But now, as you can see, the Nasdaq is testing resistance here around this area, which was previously support before it broke down. Let's see if the market will be able to push through this area, or we will go back below last week's high. So keep a very close eye on last week's high, which was this level at 17,773. Right now we are slightly below that level after rising slightly above it earlier in the session. So that's going to be a very interesting level to watch. If the market goes below that level and holds below it, I think that could put the bulls in a spot of bother. However, if we go back above the high of last week's range and stay there, then that could pave the way for more gains as we head deeper into the week. But overall, it's not a very strong trending market like it was in the past. because now we've broken below the 21-day exponential. It's now being retested from underneath. So let's see how today's session will close to give us some technical indications about what to expect in the next few days. Now, for more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.